Hello everyone, welcome to another sharing session. And for today's topic, we will actually be talking about copper. So again, today I have with me Nicholas. We will be talking a little bit more on copper, particular these three key points. Is the copper trade head fake, or are we at the beginning of a new super cycle? So later, Nicholas will elaborate a little bit more on this particular point. What exactly is a head fake? So he will pull out a chart and he will explain to us what exactly is a head fake based on whatever that he's seeing on the chart. And after that, we'll be talking a little bit more on whether copper is going to be a new goal. What is the fundamentals that's really driving copper demand moving forward? And is the demand really going to skyrocket in the coming, not just years, but potentially the next decade? And last but not least, how we can actually play this move based on some potential ETFs or stocks. We will take a closer look on that basis. Okay, so without further ado, I will hand over to Nicholas. He will take us through what he has. Thank you, Nicholas.
Thank you, Royston, and good afternoon, everybody. Yes, I mean, this is the big question that we are trying to unravel or understand. Is copper trade at this level a head fake? And the head fake simply means whether this is going to cause us all to a dummy move on one side, and then, it reverses in tanks, or is the move on copper, which was so good, going to continue, to another new super cycle per se. Okay, so I have some charts, I have some arguments, and obviously Royston has some wonderful stories to tell you at the end also with regards to how exactly to play and to position it for your portfolios going forward. Okay, but first, let me just go through this very quick, important piece of disclaimer. And these are all meant for education purposes to help our audience or the general audience to have a wider understanding of this product nature or this subject nature. Both Royston and I have our own personal opinions with regards to them. They don't constitute advice in whatever way. Okay, so bear with us. Okay, let's get down to it. Is this a new head fake? And this is what I meant. What I mean, folks. Okay, you see this area down here. Copper has moved tremendously strong. I mean, tremendously from the bottom pits of the COVID bottom. I think in April last year, and it just went on one direction. Okay, testing a all-time high that was achieved early in 2010 or so. Okay. Now, what has caused this move? And before I set out to answer that, okay, what I like to do is to just orientate you through this chart. And you can see that while we have a very nice upward trajectory on the right, right hand, a nice gradient of 45 degrees or so, copper, like all commodities, are riddled, okay, with all these ups and downs, ups and downs, and ups and down swings. Why? Because it's a commodity. Okay, every time the price of copper goes up in this case, and it went up from 50 cents to say $1.50, which is actually almost a 2.5 bagger at that point in time. Okay, what happens? It collapses. Why? Because when it moves like this so strongly, you see a lot of producers and miners come up, and they basically come in and they just flood the market with supply, and they just dump. Now this happened all the way until this sort of range. Okay, and I just want to orientate everybody. This was a very important period in the time because there was a structural change in the whole demand of copper itself. And the structural change, very simply, folks, was China came into the game. China came into the game and they consumed and they took the supply from the rest of the world, okay, and they just built. They built Shanghai, they built Beijing, they built Tianjin, Shenzhen, Guangzhou, all these super cities. Why? Because they demand copper. Why? Because copper is so skewed towards the construction sector. So in this instance, it is not cyclical. It was structural change, and as a result of that, it caused this super cycle. And this super cycle saw copper move from 60, 70 cents all the way to about $4. This essentially is a multi-bagger over a nice period of 10 years or so. This collapse obviously was a great financial crisis, but the rebound was very strong. Folks, what we want to talk about today is that copper is here now. Okay, are we going to see a new super cycle? A new super cycle, because I don't think China is going to be, just the main guzzler or the main consumer for copper. What in the world today is going to bring that consumption up? Okay, hopefully just stay with me, guys. Now, copper, just as a quick introduction, came from this, get processed into units like this, and then they basically, these are the two big consumption areas of copper. On the left, you see pipes. Copper pipes are great because why? They are anti-corrosive, very strong anti-corrosive feature. And on the right, you see wires behind all your, your insulated wires that you have, all your devices, and obviously in your big home, your home in general. And copper is used for that. Why? Because they are excellent conductors of both heat and electricity. Now, that's why they are so widely sought after in construction and in buildings and in infrastructure. Okay, that's in the past because we had China coming up, we had Shanghai, we had Beijing, we had all those different cities. What's going to bring copper up to the next level, we think, okay, is going to cause, that may cause another new move in copper to a much, much higher level. Let's look at this demand picture. Okay, we are here now, today, 2020, 2021, and the demand for copper is around 28 billion tons. And this is something the good folks at Science Data has provided us. They have forecasted a very nice, strong upward trajectory all the way to the end of the century, okay? Very long time from now, okay? But it shows a very, very strong gradual rise, okay? That rise is going to be taken over by, you can see, dominated by this and this, okay? Sorry, this and this. This area here represents buildings, construction, mainly cities. Like what I mentioned to you earlier, Shanghai or China markets or China cities dominated this. The next phase of demand will come, we feel, from the blue phase, which is infrastructure, and also increasingly transportation. The remaining three different phases that you see demarcated by the black, the purple, and the red sections, okay, are probably going to just consume their fair share, but not grow by a huge amount. With regards to transportation, let me just go into that. EV, okay, we all know that there's a huge hype in the market about electronic vehicles, and electronic vehicles consume a lot more copper. Now, we're not just talking about vehicles, but the whole infrastructure behind supporting the whole EV arena. And that has to do with, stations, refueling stations, recharging stations, etc., etc. But the basic car itself, okay, the basic electronic vehicle car itself will consume 3 times as much, 4 times as much copper, purely because there are a lot more electronics. There's a lot more software in it. And when there's software, there's electronics, the car becomes smart. And there are a lot of parts which has to talk to each other to essentially offer you the super sub, vehicle of the future that everybody's touting about. Okay, which is completely different from your pure internal combustion engine style. So this is going to be one area of focus. And like I say, folks, you see the yellow bar down here, it is widening, going out into the into years ahead. But still, the key thing or the key reason why we think copper may be at the cusp of a bigger move, okay, is largely due to this section, okay, which is the infrastructure section. Infrastructure can be determined in many ways, okay. In the past super cycle, it was infrastructure in China when they constructed not just buildings, okay, power stations, bridges, etc. But infrastructure can be in the next phase is going to be driven largely, we feel, by a change in mindset of the whole world, okay. The reason why I pulled out this graphic is to show you a concerted effort by the United Nations to hit certain goals by the year 2030. Okay, this, I mean, if you're not fully aware of what this is or what this represents, folks, it's basically 17 sustainable development goals that United Nations have sought to hit by the year 2030, okay, barely 10 years from now. One of the key aims is to provide affordable and clean energy in a much more prevalent manner than what we see today. Remember, today we all depend a lot more on fossil fuel, and fossil fuel, they not only consume a lot of energy, but more importantly, they pollute the environment. So when we talk about renewables, we're talking largely about 3 things, folks. 1, solar; 2, hydro; and 3, wind. Okay. With regards to hydro, that technology has been around for years, and we will continue to develop that. But the 2 key new elements has been solar and also wind. Okay, in particular, when you are talking about wind, you're talking about both onshore and offshore. When these things, or when this form of renewable energy comes into play, what we will see happen is the demand for copper just skyrockets and shoots up. Why? Because when, for example, okay, when you develop an offshore wind farm, okay, hundreds of kilometers out at sea, you need to actually bring that power back. And that power is being transmitted, okay, after being harvested out of the sea, is being transmitted via copper, your humble copper wires. And that basically adds to the infrastructure needs, okay, that will ultimately cause for demand in copper and potentially also cause a new price rise in copper to possibly a new like what we saw. Just to give you a perspective, right now, that whole section commands roughly about 1 million plus minus metric tons. Okay, the forecasters and visual capitalists feels that by the year 2030, okay, which is barely 10 years away, we are going to see more than a doubling of that demand collectively coming from this section. And then as you go further out into 2050, okay, don't forget 2030 is the first sort of target that the United Nations have agreed to actually meet certain standards of percentage of renewables, and they have enforced this very strongly against almost all producers of power at current present. And then in 2050, that number doubles once more. Okay, so there is an urgent need. And there is a time-based effect in terms of trying to get to speed where we're supposed to be. Lastly, I just want to touch very softly shortly on the demand, on the supply side. Okay, today we are around here, okay, where there is a slight deficit in terms of copper supply versus copper demand. As you can see, the demand gradient is a bit gradual down here going up, and then it will probably accelerate even more. But it is very evident that there is not enough, or there is definitely not enough supplies, copper being mined from the different, from Earth, okay, be able to fuel this demand, especially when we are seeing a whole new potential structural change come into the foray. I'll end with this chart, okay? Remember where I talked about and said that this was not a normal cycle, but this was a super cycle because it was not cyclical in nature, what happened, but this was a structural change, and it was China that introduced to the rest of the world. We are here now, okay, testing its all-time high. And the retest of the all-time high from the bounce of the low of COVID was so strong, clearly suggesting that there is a huge supply-demand imbalance. The question, folks, I have for everybody, are we going to see this thing shoot up, from here continuously, and again presenting opportunities of another super cycle, or are we going to see, a head fake whereby, copper itself reverses down? Okay, so what do you think, Royston?
Well, I think, or hopefully my personal view is that we are potentially on the cusp of a new super cycle. So potentially copper will actually be trending much higher based on what you have just explained to us. And I think it was a real eye-opener in terms of understanding some of the basics, as well as where the key demand is going to be coming from, which particular sectors. I just now, you really have explained it very succinctly, and put it in a term whereby I think most of us will probably be able to understand. So anything else to add before I actually move on to my portion, which will actually touch a little bit more on what kind of products that we can be looking at if we are kind of like bullish on the copper trade?
I think I've had a strong argument, an argument that I've convinced myself on. Now I'm hoping to be able to see what you can share with me and the audience on exactly how to play this.
Okay, sure. So let me go to my part. I will take over from here, and I will kind of like share what do I actually have when we want to actually play this copper trade. So we will be looking, let me touch a little bit in terms of point 2 as well. Just now, I think Nicholas have done a fantastic job in terms of explaining the fundamentals of copper to us. And I believe that copper could potentially be the new gold moving forward. And the focus have always been on gold, silver as the kind of key precious commodities that a lot of people are focusing on. Not much focus has been put on copper, which is actually the kind of metal that everybody uses most of the time. So I would think that potentially there's going to be quite a bit of demand for copper moving forward, and let's see how we can play it. But just now, Nicholas also was highlighting a little bit on the EV. Let me just touch a little bit on that portion. So this chart basically shows the kind of like demand from green energy. And basically what Goldman Sachs is saying that from now all the way until 2030, potentially we could see a substantial increase in copper demand precisely because of the proliferation of green energy, and particularly a few areas. Number one is charging point. That is pretty marginal, as you can see on the green area. And just now, I think Nicholas have also touched on wind, offshore wind, onshore wind, showing the kind of demand potential, as well as solar demand. So that's going to be pretty substantial. The EV demand, that is something that we have all been talking about, a lot of focus on EVs, Tesla cars and stuff like that. That is also going to be one key area that is going to be driving a huge copper demand. So moving forward, that's where we can see a potential 6 times increment in terms of copper demand from this green energy sector. So just wanted to bring a little bit of context on that. And just now, I think Nicholas also highlighted a little bit in terms of the supply-demand mismatch. He highlighted that demand will kind of like be creeping higher, but at the same point of time, supply would actually be declining quite substantially. And from this chart, basically, Goldman Sachs is saying that there's going to be quite a bit of deficit in terms of where demand is, which is going to be growing consistently around a 4 to 5% per annum basis, whereas the supply of copper is actually going to go into negative territory. So why exactly is the case? Why aren't more copper being mined? It's not because of the fact that there's insufficient copper. So it's not like gold or silver whereby there's really limited amount of quantity. The truth be told is that there's actually a lot of copper, but the fact is that the copper miners, these big miners have not been putting in the necessary resources and capex to kind of like develop this mine. So that actually brings in this particular chart that I wanted to highlight, that for many years, miners have actually kind of like recycled their capital, whatever free cash flow that they have generated, whatever profits that they have generated back into capex. So during the peak sometime in 2011, 2012, you can see that capex spending by the miners was very high, because at that point of time, the copper prices was also very high. So a lot of them are pouring back into developing new mines, assuming that, of course, copper prices can continue to go higher. But as we all know, copper prices have been pretty cyclical, and substantially when copper prices actually decline, so has the capital expenditure amount. But what I would like to bring the attention at this point is the blue line, which is basically the dividends payment. There has been increasingly more focus being made on this particular area. So the focus have actually shifted. Shareholders are right now demanding these miners to actually pay them more in terms of dividends as compared to recycling the cash back into capital expenditure, because by doing that, they cannot receive the money. Whereas if you pay me dividends, I will straight away have dividends into my pocket, right? So because of the cyclical nature of copper, a lot of companies have been burned. They kind of like develop mines too quickly, too aggressively, and then copper prices starts collapsing and basically they start losing money again. So it's a whole cycle that continues over and over again. Right now, the focus has been that shareholders is saying that, hey, I want to have more of this money that you have generated in good times, give it back to me in the form of dividends. And that is exactly why at this current juncture that capital expenditure is not increasing as fast as it should have been, because a lot more cash flow has been diverted into shareholders' payment. So that is one particular reason. Yeah,
just to understand you correctly, Royston,
yeah,
and to be clear, absolutely clear. So what you're saying is that there's a lot of copper in the ground. It's not because copper is a scarce commodity. It's just that the miners are down there, who are there mining copper, have not committed to mining this new capacity or so-called mines of copper mines in the ground. Instead, they have been recommitting their excess cash flow or cash or capital back into shareholders via dividends. And as a result of that, we may be in danger of the supply of copper not meeting the demand that we see coming from the various sectors that we are portraying, right?
Yes, exactly. So you
And
have
that
put
could
it in a
cause a price of copper to actually go up. Okay.
Yeah, exactly. So you have basically summarized what I wanted to say very well. So that's exactly why potentially we could be seeing this kind of deficit moving forward, because not enough capital is recycled into developing the mines, whereas demand has been pretty consistent in terms of growing at 4 to 5% per annum. So this is one key reason as to why potentially we are going to see that kind of deficit, which will kind of like trigger copper prices to kind of like rally higher, in my opinion. And of course, in Goldman Sachs' opinion as well. Right now, the current price is at 10,001. They believe that by 2022, the average price is going to rise to somewhere around 12,000 per ton. And by 2025, 15,000 per ton. So that's a substantial increment on that basis. Okay, let's move on. So basically, how to actually play the boom in copper, I think that there are a number of ways. One way is potentially to look at miners. Just now I've highlighted miners. And Freeport-McMoRan, the ticker FCX, is potentially one key miners that you should be looking at. The bulk of the mining operations is focused on copper. So this is one of the bigger miners, pure play copper miners that you can be looking at. And you can see this chart based on its performance relative to copper prices over the past, I would say, 15 years thereabout. It has actually tracked copper pretty well. It's just that the magnitude is a lot more volatile. So when it goes up, when copper prices goes up, you can see that the magnitude of Freeport shares actually increase substantially more. And when it comes down, you can see that the decline is also pretty substantial. So this is essentially a leverage play on copper prices, so to speak. And what I'd like to bring your attention to is that at this current juncture, copper has already surpassed its last high, which was reached back in 2011, so roughly about 10 years ago. It has already exceeded, but so far in terms of Freeport's share price, it has yet to actually eclipse its last high back in 2011 as well. So potentially there could still be a roughly about 30% upside just to match the rally in terms of copper. So that's one way to play it, mining stocks. So I can give you a few more examples on some of the bigger miners out there. For example, Freeport-McMoRan, I highlighted Southern Copper, BHP, Glencore. So these are the big miners that you can look to focus on if, let's say, you're positive on copper. Some of the smaller miners, which tend to be a little bit more volatile, are your Turquoise Hill Resources as well as Copper Mountain Mining Corporation. So these are potentially pure play copper, small to mid cap kind of miners that you might be interested to look at. But personally, I think if you are more conservative, so to speak, it's better to actually buy into a basket of these copper miners. And the ETF with the ticker COPX actually allows you to do it. So this particular ETF actually invests into all the key copper miners, right? And its top 10 holdings is basically shown over here. So you can see a number of big players like FCX. You can see a number of small to mid-cap players like First Quantum, as well as Tech Resources. These are some pretty well-known copper players as well. And it's not just to Singapore, to US kind of copper holdings, but you can see some of these China players as well, like Zing Mining Group, which is also taking up a substantial proportion of its ETF, all right, in terms of that. So playing the ETF on copper miners is one way to go about doing it. So this is something for you guys to actually consider. But my own preferred pick is actually to look at this particular ETF called PICK. All right, so this is something that not many people will be aware of. This particular ETF actually tracks copper more closely based on the share price performance. So you can see over here in terms of how closely correlated this particular ETF is relative to copper prices. Very closely correlated. So this is actually a better way to actually potentially play the copper game. And this particular ETF actually invests in different mining companies. So it's not just solely focused on copper, so to speak. A lot of big names you can see over here: BHP, Rail, Vale, Freeport, Anglo American, Glencore, etc. These are all big time miners that somehow have been able to actually track the performance of the copper commodity pretty well. So this one actually excludes gold as well as silver miners. So for gold and silver miners, they don't partake in it. But beyond the fact that it actually tracks copper pretty closely, I think one particular interesting point that not many people will be aware of is that this particular ETF is one of the rare natural resources ETF that has been able to consistently outperform the S&P 500 over a 5 years horizon. So that to me is pretty surprising as well. We know that commodities can tend to be pretty cyclical, and definitely on the last 5 year basis, a lot of commodity players have actually underperformed the market. Definitely on the last 1 year basis, a lot of them have outperformed the market, but if you stretch it all the way back to the last 5 years, a lot of commodity players, be it individual stocks or ETF that is focused mainly on commodities, have underperformed the S&P 500. This is one of the very rare ETF that has actually been able to consistently outperform the ETF, as you can see over here, on a 5 year horizon basis. So that to me is pretty interesting. And if you to ask me why that might be the case, to be really honest with you, I've got no clue. It's just that the selection of miners, which is basically the big time boys who are probably a little bit more diversified in nature, have been able to show pretty good consistent performance in their earnings, and that could be one of the key reasons why they have all done pretty well. And resultantly, this particular ETF has also been able to substantially outperform the market. So this is one particular ETF which is one of my favorite. I think you can definitely take a look if you want to play potentially a longer term game, so to speak. Last but not least, so this is the last portion from my part. Last but not least, you can also look to partake in this particular type of ETF. So this is called ETC, Exchange Traded Commodity. So it's pretty similar to exchange traded funds, but just that there's differences in terms of the legal structure. So I don't want to go too deep into that. But one particular ETC that you can be looking at, let's say if you really just want to track the underlying performance of copper, will be this CPER ticker, which actually tracks the performance of copper. Just that it's very difficult to be buying into this particular ETC on a long-term basis. You can see that in terms of a long-term performance, after roughly about 10 years, the differences in terms of performance is pretty substantial. So there's actually quite a bit of cost of buying into this particular ETF or ETC, so to speak. Nick, you got anything to add?
Oh, no. I mean, this ETC trades in the normal exchange, I presume.
Yes, so you can actually buy it just like a normal stock as well, like
Okay.
pretty much what you are doing with ETF lah. So it's pretty much the same. It's just that the legality structure is slightly different. But one key point to take note of is that the expense ratio is high, and basically the underlying that this particular ETC actually invests in are basically your future contracts. Some of them are quite short-term in nature, and that's where the rolling cost might come. And that goes to explain as to why on a long-term basis, there could be such a substantial differences in terms of overall performance lah. So basically this CPER has underperformed copper by roughly 20 percentage point over the last decade, so to speak. So there is definitely a holding cost for this ETC. So not really suitable for long-term play, but more suitable for maybe, let's say, a short-term quick punt, so to speak lah.
Yeah. So just to, I mean, thank you very much. I think you've highlighted to me and I think everybody quite a few different ways to actually play that copper move. Should copper move the way we figure it may move because of the new structural change and the new super cycle. So just to summarize, you're saying that a stock itself, like a Freeport-McMoRan, they are probably going to be a more leveraged play into it because of the volatility behind, or the direct volatility behind that. And then the ETFs that you have also represented, the best one is PICK, purely because it has a lot of the big major boys, and I can see that the weighting in those major boys are substantially weighted, so you are seeing a more directly correlated. And then maybe a more diversified way to play this with a bigger spread is the previous ETF, where they are maybe not the big names, but they are more evenly spread in terms of 5%, 6%, but even weighting behind them, right?
Yeah.
Is that a good way to summarize some of the recommendations?
Yeah, I think yes, I think you have summarized it pretty well. Just like to add on that for COPX, it's basically mainly focused on copper miners, or basically miners who have the bulk of their operations focusing on mining copper. Whereas for PICK, it's basically a more diversified kind of a structure. These are all these big mining companies that mine steel, mine aluminium, etc. Copper being one of them as well. But the key focus is not so specific towards copper. But somehow it does actually track the performance of copper prices pretty closely.
Yeah. No, but your chart on the outperformance on the S&P is incredible.
Yeah. So yeah, definitely it's something very surprising to me as well, because like I mentioned, I thought that commodities has been pretty cyclical, and over on a 5-year horizon, it definitely has not performed well. So somehow the fact that it actually manages to outperform the S&P 500 that substantially over the last 5 years has been quite enlightening to me.
Yeah. Okay, man. Thank you. Very good ideas.
All right. Okay. Anything else to add, Nick?
No, I think we more or less covered it, and we took a lot of time. And I hope folks will join us as we continually put up some of these presentations or some of these stories that could be in the market.
Yeah, I think today has been a very interesting session. We have gone through some of the fundamentals of copper, why we believe that it could be a new gold. And we also talk about a little bit on how you can actually partake in the rise of copper through these ETFs or through particular stocks. So I hope that it has been a fruitful session for the viewers, and we will definitely have another session for you guys moving forward again. So do look out for it. All right. So if you are interested, yes, if you have any questions, do drop us an email over at our contact at newacademyoffinance.com, and definitely subscribe to our YouTube channel as well. All right. Thank you, Nicholas, once again. We will see you guys pretty soon. Bye-bye.
Bye-bye.